Hello everyone, I'd like to thank the US Soybean Export Council for giving me the chance to talk to you about the dry bulk market, and in particular its relationship with grain, and to give you some form of insight into some of the factors that will affect its forward direction. I hope that you can follow this slide presentation, and I'll try and pause between slides. My first slide shows the Howe Robinson Dry Index, the figure of which is determined by the deadweight carrying capabilities of the dry bulk fleet, weighted obviously towards the Capesize. You can clearly see we've had extremely volatile markets over the past 5 years, no more so than in the last year, where we've gone from the record highs in September to near record lows about a month ago, and we're still languishing at very low levels. Dry bulk shipping is a good bellwether for economic activity and has suffered, like so many other industries, from the fallout of COVID-19. On the right-hand graph, we chart the time charter rates earned by the various vessel sectors this year. Here you can see significantly lower than average rates than 2019, particularly in the Capesize. But equally, you can see that the highest rate is that of the Panamax at 6,880, which is the average for the first 6 months of this year. And in no small part, that is due to the influence of grain. So turning to the next slide, and this is two more Howe Robinson indices. And here we have Gulf China and Santos China, two indices that we produce daily, taken together with the BPI. And you can see equally here, we've got high and low rates for each year. And you can see a certain amount of volatility. You always get this, obviously the gap between Brazil and China because the costings and the length of passage are different. Equally, you can see the BPI rate, which obviously does influence the market. So when I talk about BPI, I talk about Panamax carriers and the more modern unit, which is called a Kamsarmax, which was first designed about 14 years ago, together with a vessel on the next slide called the Ultramax, which is a geared ship, which is slightly smaller and a little bit more flexible and shallower. So why are these two vessels important for your soybeans? Well, that's because almost all the soybeans exported from the US to anywhere in the world go on these classes of ships. So you can see that in the US Gulf, 32% went on Kamsarmax in 2019. And if you look at, for instance, North Pacific, almost the entire soybean crop that was shipped from there went on either Kamsarmaxes or Panamaxes. So why is grain so important to the Panamax and Kamsarmax trade and also to Ultramaxes? Well, as you can see, this graph charts the Kamsarmax trade over the last 10 years. And you can see that grain has gone from only 22% of trade in 2010 to 63% in Q1 this year. So it's vitally important factor for our time charter markets. Then moving on to the next slide, this is the Baltic indices of the Capesize, the Panamax, and the Supramax, which incorporates the Ultramax. And you can see that you have these big highs and big lows, the big highs coming and lows, particularly from the Capesize. This is really to do with the carriage of iron ore, but they do have an effect on markets because you do get sometimes more iron ore on very high markets moving into the Panamaxes and to a lesser extent the Ultramaxes. So they have an effect on markets, and you can see, for instance, they had some effect in dragging up the market in Q3 last year. Equally, you can see that we have a correlation between first half of the year and second half of the year. And we usually get a seasonal bounce in the second half of the year. This is because you get the soybeans moving into Q3 from Brazil, the start of the US grain season, and then also the corn season now from East Coast South America. So our rates, as you can see, are very low. They're back at 2016 rates. But we think, and I'm going to come to some of the reasons why, that the market will probably improve in the second half of this year and certainly into 2021. So looking at a bigger picture, You can see this is the average of BPI over since 1991. And you can see, apart from the super boom during the Chinese industrial boom, you can see that we have what looks like relatively normal markets. And you can see that the average time charter rates, that's the rate that an owner earns daily from the chartering of his ship to a charterer, whether that be a grain house or an operator or a commodity house, has remained relatively similar. But within these sort of tight bands that I believe that the market will stay now, you can see that we can move between 3,000 and 4,000 up to nearly peaking at 20,000 last year. So these are considerable movements among a much tighter band. So what influences the time charter rates? Basically, fleet supply and demand. So first of all, we look at fleet supply. And this is a brief look at what's happened so far this year. Remarkably, shipyards in Japan and China have not been that affected by disruptions from COVID-19. And actually the output of ships, particularly in Japan, has been almost completely unaffected. So you can see that this year so far, 210 ships have delivered 21.6 million deadweight, and in comparison to last year of 167. Equally, you can see, though we've had more scrapping, because there was a lockdown in the subcontinent, which is where all the ships are scrapped between March and April, we saw very little scrapping at that point. We expect that to pick up. So where are we with fleet supply? So you can see that 2019, we saw a strong inflow of Kamsarmaxes into the market, 118. Equally this year, we can see another strong inflow of ships. In fact, the most since 2014. But after that, it slackens off. Equally, when we look at the Supramax, Ultramax market, the Supramax is a smaller ship than the Ultramaxes. And that was the usual design. As you can see, in the same way as Kamsarmax has superseded the Panamaxes, so Ultramaxes have superseded the Supramaxes. But again, you can see strong deliveries in 2020, but then drifting off. We then look at the overall picture and our forecast for this year. And you can see that our overall forecast is 3.4, 3.5% for the overall fleet. But looking at it, you can see that Panamaxes, which incorporates Kamsarmax, actually strong inflow of ships this year, 11 million tons, probably less deletions because the rates are higher. So a fleet increase of 5.2%. Equally, you can see that Supramaxes is lower at 2%, and Handysizes, which don't really carry the grain, is basically all square. But there is positives on the supply side. You can see that this is looking back to the year 2000 and the order book on the right-hand graph. And during the boom, you can see that almost 2/3 of the fleet by 2009 was on the order book. Such was the increase in the rates. We've suffered from that overhang of ships, but it is gradually working its way through. And you can see that the percentage number of ships at 8.2%, looking on the left-hand side, is lower than it's been probably for the last 5 years. So this is a positive for our market. And you can see in the key areas of the Panamax and the Ultramax that we've got 7% and 5.6%. These are traditionally low numbers. So going forward, this is a much more positive outlook. Finally, looking at annual fleet growth, and this gives you the numbers of ships in deadweight terms that have delivered each year, and in the grey figure, that's the deletions. And you can see in strong years like 2018, we had virtually no scrapping at all. Scrapping has, as you can see, we think will pick up this year, and we think that overall net fleet growth is 3.5%, which is more or less in line with what we've had the last 4 years. It's important to think of this figure for when we look at demand. But what is more significant is that you can see next year, the fleet drops away very quickly because not all that 28.5 million tons will deliver. And so both 2021 and 2022, there's likely to be less ships. And certainly because of those concerns about propulsion and what form of energy will be used to fuel ships, there is an uncertainty from owners. Also, when you have very low time charter rates, owners don't order ships. So now we look at demand. And our first slide looks at dry bulk trade in 2019, 6.2 billion tons. And you can see a breakdown into where the cargo is broken down into the different sectors. Minor bulk is the largest. That's anything from steels to minor minerals to minor agrics, fertilizers, scrap, steel, pet coke. Iron ore is the obviously single biggest commodity. 90% of that is carried on Cape sizes. So where does grain figure? Well, grain, as you can see, figures quite strongly, and particularly as far as China is concerned. I put on the right-hand graph that China imports 70% of all the world's iron ore, 17% of the coal, and 20% of grain. And certainly for soybean shipments, you can see how important China is. 78% of all the Brazilian crop and 93% of soybeans. That's as they don't take generally soybean meal. So you can see that China, remarkably, in the first 4 months of this year where we have data with iron ore, coal, actually with grain and with bauxite and nickel ore, actually shipments have been more or less unaffected. And it is a tribute to ship owners that they've managed to keep our flow of cargo moving. So where are we as far as dry bulk trade is concerned? So you can see that for the last 10 years, we've had some growth in trade each year. Last year, we had 2.1% growth. But this year, we're going to see falling growth, mainly because you can see coal is falling away somewhere between 7 and 8%. Iron ore steady state. Minor bulk, which has been a force in the market the last 2 years, falling off by 2.7%. That gets particularly affected by world GDP. But of course, grain you can see is the one area where we are seeing an increase, which is significant. But there's no doubt that the scenario of supply and demand is not good for the dry bulk fleet. We've got 3.5% growth in the market, but this year we actually have falling demand. And where's this most keenly felt? Well, most keenly felt in coal. You can see that reduced energy consumption has dampened demand, and they're facing a challenge from cheaper oil prices, cheaper gas prices. Particularly in the Atlantic, there's environmental moves away from coal. It's affecting Colombia in particular, and to some extent the US. Largely met coal, which is used in steelmaking, isn't affected. So Australia and Canada have still got reasonably strong export figures for this year, as have the US East Coast exporting of met coal. So what I want to focus on to finish with is grain. And as you can see, that this is our forecast for 2020. So you can see that year on year, we've had a very strong first half, or we expect a very strong first half 2020. And you can see that grain is picking up from 275 million tons last year to 298 million tons this year. And you can see where is this focused in? Well, actually, it's in soybeans and in soybean meal, but more particularly in soybeans. We saw the big increase in corn last year, particularly from Brazil and Argentina, which fueled the market in Q3 last year. Barley is obviously up again this year, but obviously these are relatively low figures. So looking at the growth of grain, and grain is going to continue to grow in our opinion as the world's population of 7.7 billion needs feeding. And you can see where has the growth of seaborne grain been over the last 10 years. And you can see this has been in corn and soybeans. And you can see where the big increases have come from. In particular, from Brazil, which has gone from exporting 49 million tons in 2009 to 134 million tons last year, which is a very big figure. Also increases obviously for the US and for Argentina, and significant increases for Ukraine and Russia, but that's more in corn and particularly in Russia's case, wheat. So where's this demand from? Well, you can see that demand to China, Vietnam and Indonesia back in 2009 was a mere 17%, but that's moved to nearly 27% now. And Vietnam in particular is spectacular. Back in 2009, they imported 3 million tons of soybeans. Today, it's nearer 20 million tons. And looking at Chinese grain imports, you can see that they've largely flattened out over the last 2 or 3 years. And this is probably as a result of the swine flu, which has affected their pig herd significantly. We think by as much as 45%, bearing in mind that they have 600 million pigs, or they did have 600 million pigs. This is significant. But they have increased, they have largely eradicated swine flu now, and we're quite confident going forward that these soybean figures will increase. And actually this year, record figures from Brazil for both April and May are synonymous with the fact that China are importing close to 10 million tons a month. So looking at the sort of soybean exports, and you can see this is Brazil have been exporting record numbers in the last 2 to 3 months, and this is buoyed mostly by China. In some cases, we think wanting to stockpile. Looking at the US shipments, and you can see that obviously Q4 is the main exporting time. Clearly, the trade war has not helped exports, but you can see that in the right-hand pie chart, for all grain soybean exports from the US, about 3/4 come from the US Gulf, and the other quarter mostly from NoPac, a little bit from the US East Coast ports. So what determines our freight rates? Well, what's going to happen with freight rates? So this is a chart giving you the 3 factors that impact on freight rates. So you've got the fixed costs, that's your port costs, and other costs associated with loading and discharging grain. Then you have fuel costs, which of course are very key. And then you have the time charter element that is what the owner earns. So you can see that in the more economical Kamsarmax, you can see that their fuel economy is much better than that of the more older designs, smaller Panamaxes. And they will obviously continue to take a bigger share of the world's grain because this is more longer haul trade. And you can see that by and large, the time charter rates make up 2/3 of the cost. Equally, when we look at the bunker prices, they're also very important as to where we're going to go. And obviously, you will have, of course, all read a lot about IMO and what will happen with IMO with the change in fuel. And obviously, a lot of people felt that there would be a shortage of this new low sulfur grade fuel. In the event there wasn't, but because of some of the bottlenecks, the prices of fuel went extremely high at the start of the year. So you can see that that's the one time where we hadn't got a correlation because the freight market was falling incredibly quickly, even at a time that we had very high fuel prices. Of course, since then we've had a commodity crash in oil, and you can see that in fact fuel prices have dropped to incredibly low levels. And you can see that as of today, Shanghai price is $310. Equally, you can see that in the other graph, we show the NoPac China rates. And generally, you can see that the firm rates come in they always seem to come in Q4, which is largely because obviously that's where there's more US grain moving. And you can see that they peaked at close to $30 in September last year, now down at $18. But we can see, we're obviously not going to go back to those peaks, but we can see that bunker prices are going to rise. So we can see that the markets will increase. And finally, looking at where we think rates might go. So I've explained that we've got historically low time charter rates at the moment, and they're likely to get firmer in the second half of the year. We're certainly going to get a seasonal bounce in the market because China is importing a lot of soybeans. Southeast Asia, we think, will strongly import soybeans. You get the corn market from East Coast South America in Q3. You also then get the Ukrainian corn market coming in Q4 and the Russian wheat market. So we're going to see more ships being fixed on outbound journeys, which will mean that there will be probably a lesser number of vessels in the Atlantic Basin, which means that we think that market rates will probably go up, particularly on the US Gulf Far East trade. Obviously, knowing what the exact rate will be determined by the time charter rates at the time. Equally, we see also rates going up on the NoPac rate, but perhaps not to the same extent. So with these, what are historically low rates at the moment, now if you're a charter or a cargo interest, we think it's a good time to fix your forward freight, because we certainly think in 2021 there's going to be a lot less ships delivering. We think that scrapping will increase significantly. It means that the supply side will decrease. We think there will be a bounce in demand because there will be a demand. Not only will grain demand probably remain strong, but we do probably see a bounce certainly in minor bulks as construction comes back into play. So going forward, we are more positive about the market. Thank you very much for listening to me, and please stay safe and well. Thank you.